Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, so it looks like while tech was a laggard yesterday, it looks like it will return to being a leader today. Before we get into the latest with Alphabet, Google, let's talk broad strokes yesterday. So yesterday, obviously, we started lower. As you mentioned, not only is a weak month for stocks, the beginning of the month starts out low. So the weakness we saw in tech, industrials, consumer discretionary financials, the biggest leaders so far this year. What do you make of that?
Yeah, I mean, we did see a little bit of a risk-off tone yesterday when it came to the market breaking below the 6,400 level for the S&P 500. But we did get some economic data throughout the day that maybe gave a little bit of optimism for the market. We had ISM manufacturing data that came out, and even though we did see that still in contraction when you're looking at the overall number, the prices paid component actually did decelerate, and so that's actually a little bit of a bright spot here for the bulls. You'd like to see that also complemented with the ISM services number that's going to be coming out tomorrow, Diane, because that's actually a really decent leading indicator to core CPI over the next couple of months. And so we did see, obviously, some selling pressure taking place. It's normal in this type of environment, especially in September, a little bit of a rebalancing here. And today, obviously, we are seeing the markets a little bit more in the green. Now, what I will say is that this concentration in Apple and Google has not really kind of spread itself out throughout all of tech as of yet, but that could change as the market opens up, and maybe we do see a little bit more of a risk on tone and try to retrace some of the losses that we had yesterday.
You can see that it feels like in the price action in the pre-market with, Russell 2000 futures still under some pressure. But let's talk about the potential catalyst. Alphabet, Google, catch people up on where things stand there.
Yeah, so we did see a district court yesterday provide the ruling for Google and Alphabet, if you will, over this monopoly case. And so there was some bright spots here, which is why we're seeing the stock up around 5% in pre-market trading. It does appear that obviously they were found for the most part guilty of having monopolistic practices, but they do not have to divest themselves away from Google Chrome as well as the Android operating system. And those are really two of the core staples within their business and pretty much connects all of their apps together here. So you are seeing some optimism. You are seeing maybe some concessions, though, that will have to take place. You talked about the data sharing. That's going to be very key for a lot of these AI developers that's going to be able to have access to this data, potentially train on this data as well. But if you're looking at the contract between Google and Apple, what's going to be actually interesting here, they're going to have to open it up, if you will, but what's interesting is there's not any other company out there that actually has a browser that's willing to spend the money in order to compete with Google at this point in time. So you could make the case maybe it could be Microsoft Bing, but Microsoft probably is not trying to spend a whole boatload of money in order to try to get Bing onto the Apple devices and be a little bit more prominent. And there's not really any other providers that are out there. So the market's already kind of pricing in the fact that Google has 90% of search. Will they lose some of that over time? That could be the case, but now this also opens up the opportunity for Google to integrate some of their AI services into Apple. So this actually could be a longer term win, not only for Alphabet, but also when you're looking at Apple just in general, and you're starting to see a little bit more of an optimistic tone, even more of an optimistic tone from analysts when you're looking at Apple than what we saw in the past because of this opportunity now to leverage this competition in order to get maybe more products and services within their devices.
Yeah, it's interesting to see this, and I mean, Apple certainly needed a tailwind given its performance within the mega cap or the Mag 7 so far this year. So, it makes sense because obviously they pull in billions from prioritizing Google on the phones. It's so funny that you mentioned Bing because you make a great point about would they be willing to spend that much, and even the muscle memory for users used to just using Google obviously is still a win for them to be able to maintain that. I'm seeing a lot of analyst action around Alphabet, Google this morning. Any final thoughts you want to leave us with on Alphabet, Google, or Apple really quickly?
No, once again, this is actually going to be, this kind of sets the stage for other monopoly type of cases for the future as well. So we know that we kind of see these rounds every 2 years or so where Microsoft is accused of something or Google, Alphabet, or if it's Apple. And so this kind of sets a little bit of a precedent. And the market's also pricing in the fact that we may not see any type of formal appeal or big appeal when it comes to this decision by the DOJ as well. So that could be a risk that is out there. But from analyst expectations, it seems like this is going to be set in stone, and they're going to be able to move forward here. It sounds like September 10th is when we will see the finalized remedies being processed to the market, or at least signed off on by the DOJ as well as Alphabet.
Okay, yeah. Analyst Wedbush says this is broadly favorable. You can see that in the price action. Wedbush raising their price target to 245. Rosenblatt boosting their price target to 224 for Alphabet. Google, they are still neutral, though. And you've got Needham. They are a buy rating on Alphabet. They're raising their price target to 260. Let's talk about targets on the S&P 500. So we managed to recover and not stay around that 6,400 level yesterday. What are you watching out for today to the upside and the downside on the S&P 500, KG?
Yeah, it's still going to be very similar. So 6,400 to the downside, 6,470 to the upside. You are still seeing elevated volatility, Diane. So yes, we have a little bit of a snapback, but we need to see this broaden out outside of Google and Alphabet in order for us to really try to shake off some of that pullback yesterday. And we probably will see a little bit of a rotation when it comes to energy stocks as crude oil prices are down about 2%, as well as consumer staples as we are seeing Dollar Tree kind of getting hit post earnings as well. So kind of an interesting rotation trade, but we got to be able to hold up for today's session. Any type of reversal, if we go back into the negative for whatever reason, gives you more confidence as a bear that we could probably knock this market down over the next couple of weeks.
All right. Thank you, KG. That's Kevin Green, our senior markets correspondent. I appreciate that.